Well, this is 2026. Welcome. Welcome to All Stars Aligned Trading. This is the weekly outlook for the first week of December. It's supposed to come out Sunday, but then technical issues. But then we are having it today. This is Monday, 5th January 2026. I almost said 2025, but this is 2026. Welcome to All Stars Aligned Trading, and let's get into it quickly. Euro is having a crazy drop, and I wouldn't want to claim I saw that coming because it would sound like I'm being egotistical, but no, I actually saw this coming. But did I capitalize on it? No. So that takes away my right to even talk about how I saw that coming, but it's fine. This year is going to be a very brilliant year. Welcome. Drop in the comments how, just summarize how your holiday was with an emoji. Was it great? If it was great, then drop a smiling emoji. If it wasn't like you expected it to be, then you can just drop that emoji with the dash eyes. I will be dropping the emoji for your own benefit. So let's get into it. This is Mexican pesos on my screen, and this black line you're seeing is seasonality. And my concern is not necessarily Mexican pesos right now. I have my eyes on other assets, and we would cover a lot of things today. Cover a lot of ground because this year is going to have I know this year is going to have a lot of opportunities for swing traders, and for me specifically, because last year was more of theory. That was my first introduction to the market using this particular strategy that I'm using. So I've had my practical and I've had my fair share of whooping and my fair share of lessons. So I think it's going to be a great year. So now Swiss franc, starting with that, on everything, I'm looking at Swiss franc the most right now, because looking at seasonality, you can see that we have come to this end. 5-year average, we are expecting a very bearish January going into February. So I have my eyes on Swiss franc more than anything. If I should check the 10-year average, not formed completely, but you can see a slowdown in bullishness in terms of seasonality. And then 15-year average, but I'm working with the 5-year average actually. So looking at the 5-year average of seasonality, I can see that we have come to this point where we should expect further downward movement on the Swiss franc. And what will be backing up this particular theory? What will be backing up seasonality? That would be COT report. And this is COT report on your screen right now, zoomed in. And this oscillator is, if you've been following the channel, you know how we make use of this COT oscillator. And right now, I want to look at this 26-week look back. I want to expand that, look at the 52 weeks look back, because I cannot take a trade solely off seasonality. Seasonality cannot be my only reason for taking a trade. And then we'll also look at the 104 weeks. So let's go downward. Let's start from the 104 and then go downward to 26-week outlook. And now also I just want to look at the retailers, because that's what I want us to pay attention to. And if you look at the retailers, we can see that in 2 years the retailers are in an extreme bullish position in the market. And if we know one thing about the crowd, we know that we want to be trading against the crowd, because retailers, the crowd is usually wrong. And you can backtest that quickly by seeing all the points where the red line crossed this green horizontal line that was showing extreme behavior from the retailers. What did we usually notice? Observe here, you see that there was a downward movement. Observe here, there was a downward movement. Observe here, there was a downward movement. So in three different occasions that has been the case. Whenever we see extreme bearish or extreme bullishness from the retailers, we expect the market to move to the downside. Now, if I want to go back to 52 weeks, which is a whole year, and see extreme behavior from the retailers, then 52 weeks, while we still seeing the retailers are still extremely bullish. The retailers are still extremely bullish right here. And if you should go down 26 week, look back, this is still showing extreme bullishness from the retailers. You can still see it here, how the retailers are still extremely bullish, and that is brilliant for me, because I usually want to be positioning myself against the retailers, and would see how that plays out. And it is justified, because from the last bottom was 5th November, the last time the market was in that bearish trend was 5th, when we got this low, 5th November, and since then the market has been bullish. It has been 2 months already of bullishness. So retail follow price, and if they follow price, then it's justified that there's still extreme buying of this particular market. So what would now be my plan? Because right now I can see a formation of a based drop here. There was this formation here, but that is not what we'll be focusing on. So a supply level here, also a supply level here. So 2 supply levels that if we should be getting a retracement, I will be paying attention to. And funny how it would now be looking like a head and shoulder pattern that we are already, with the basic knowledge of the market, you're already used to. So that's for Swiss franc, and that would be my first trade for the year. On Canadian dollar, I want to see what seasonality is saying on the 5-year average of seasonality. Seasonality still, we are likely going to be expecting bearishness pretty soon. You can see that here, 5-year average. If you should check the 15-year average, because I think that was what made me have this line up here. So 15-year average of seasonality, the average of 15 years, what has it been? So yeah, we have come to this bearish point in the market for the Canadian dollar. So that's for Canadian dollar. So second trade on my list to definitely now be Canadian dollar trade, and still same technique, right? Same entry type, which is going to be from a supply level, which is this particular supply level that we can see forming right now here. So 2 trades on my radar: Canadian dollar, Swiss franc. To confirm Canadian dollar, I would have to look at COT report, and that is what we'll be doing now. So before I now look into valuation, you get, so looking at, okay, I think I delete that? Escape indicators, COT. COT should be 26 week. Okay, now I want to isolate just for the retailers and the commercials. And on the 26th week look back, we can see that in 6 months the institutions are becoming bearish. There was a point where they were extremely bullish, right? And when they were bullish, I was shouting I would be buying Canadian dollar, and I was waiting for this particular formation here, which was this drop base rally here, but the market didn't get here before this bullishness started happening here. But right now you can see that the institutions are extremely bearish. Now if I should look at 52 weeks, right, 52 week, which is a whole year, you can still see that the institutions are still in an extreme bearish place. And then to crown it up, if I should look at 104, and that will be increasing our confluences, that is a whole 2 years where the institutions very close to being extremely bearish. So three week look back, 3 independent week look back, we can still see that the institutions are extremely bearish. And what are we seeing from the retailers? You can notice that the retailers are very close to this extreme bullish point in the market. So it's not really looking good for the retailers, and it's not looking so good for the Canadian dollar, especially now that seasonally we have come to the point where we can expect bearishness in the Canadian dollar. So that would be my second trade for January. If we should get the market retracing to this particular point, then definitely I'll be taking the trade on the Canadian dollar and also on the Swiss franc that we looked at not long ago. Now I want to look at New Zealand dollar COT because I'm looking more bullish on the New Zealand dollar compared to other assets. So let me see if it's justified. And 104 week look back. 104 in 2 years, we still see that the institutions are actually bullish. We can see bullishness from the institutions. If we should check a whole year, waiting for it to load. One whole year. I think the 1 year is taking its time to load. Let me cancel that. So 1 whole year, we can see that the institutions are still bullish. They haven't left that point yet. Then if you look 26, which is 6 months, we can see that the institutions are still looking bullish. So I'm more bullish on the New Zealand dollar than I am on how I am bearish on Swiss franc or how I am bearish on Canadian dollar. I'm leaning more to the bullish side for the New Zealand dollar. Trend is good, COT report is good. What we'll confirm now is seasonality. So seasonality, nothing bad for the 10-year average. Check the 5-year average to see if there's any contrary data. 5-year average is actually stalling out, but if we should check the 15-year average and see, 15-year average still suggests more move to the upside in the month of January. Let me show you that quickly. So the 15-year average is still suggesting more move to the upside in the month of January. So I can't be doing anything bearish right now because COT solid, seasonality solid. So I'm more bullish than I am bearish on the New Zealand dollar. And what would be my entry level? This would likely be my entry from this preferred version demand here. So if we should get down into this level, I'll be taking a trade on the New Zealand dollar, which would be a buy trade, and we'll set and forget and see how that plays out. Then that's for the New Zealand dollar. Now let me check seasonality for other assets, and then we might be calling it a day pretty soon. So euro and then British pound, and then we'll be out. So euro, still bullish in terms of seasonality. 15-year average, checking 10-year average. 10-year average is still looking extremely bullish. Checking the 5-year average. 5-year average still bullish till middle of January, where we might be expecting a stalling and then bearishness. But now checking COT reports. COT reports, institutions are extremely bearish. Institutions are extremely bearish. Retailers are extremely bullish. Checking the 52 weeks, which is a whole year. Looking back 52 weeks, we still see bearish behavior from the institutions. Checking 104, which is 2 years. Checked 1 year, which was 52 weeks. Now we are checking 2 years. And 104 week, what do we see? We still see extreme behavior from the retailers and extreme behaviors from institutions, because the retailers are extremely bullish right now, but you can see that the institutions are already accumulating bearish orders, and you can see it reflecting already in the market. So for the euro, what would make me hop on this trade is if we should get any retracement. Nova Edge is already on this trade. Shout out to him. Solid entry from this preferred version level here. So trade from here triggered and is going properly. So seasonality might be ignored because COT already is looking very good, and then I would confirm everything with valuation. But that's for the euro. So euro more bearish than bullish, and my outlook for the euro is more bearish than it is bullish. Now to check for the British pound, I'm not paying attention to the Japanese yen. Australian dollar, I might look at it because I've looked at New Zealand dollar. So now I'm checking for the British pound. Seasonality on the 5-year average is still to the upside. Checking 10-year average, and before we look at the 15. 10-year average still to the upside. 15-year average. 15-year average still to the upside. So there's nothing. Now let me just check seasonality on Australian dollar, and then we'll know. So seasonality on Australian dollar still to the upside for now. This was short-lived. This trade was actually short-lived, but I'm glad I took out that trade. If you were around last year, you know what I'm talking about. So seasonality is still the upside for the Australian dollar. Then 5-year average still to the upside until middle January, where we can expect a stalling. That's for this. Now I want to check the COT oscillator and then see our extremes. Retailers are extremely bullish, which is justified, and the institutions are actually becoming bearish. And this is 2-year average. 2-year average. I should be cautious. Remember New Zealand dollar, right? New Zealand dollar, the institutions were still looking bullish on the 2-year average, on the 1-year average, and also on the 6 months. So you are seeing a completely different story now that we're looking at the Australian dollar. And if I should check the 1-year average, I would want to see if it's a similar story. Mad. This is wild, bro. Like extreme bearish. I don't think the institutions haven't been this bearish since 2024 October. Haven't been this bearish in a very long time. So since 2024 October, that is over 4 months already. If I should check the 6 months, this is extreme, like very, very extreme. And you can see the retailers are also extreme. So for this, I should be expecting correction on the Australian dollar pretty soon compared to the New Zealand dollar. I'm still holding my buy trade on the New Zealand dollar, but Australian dollar, that's 3 trades right now. That's 4 actually. Swiss franc, Canadian dollar, euro, and now Australian dollar. Swiss franc, Canadian dollar, New Zealand dollar, Australian dollar, and euro. 5 trades to start the month. But we'll be selective and we'll pick the best out of the many. Wow. Going down to the daily time frame. Seasonality doesn't support me rushing into this trade on the Australian dollar. Not at all. But what I can say is that New Zealand dollar, I'm definitely taking that trade. Swiss franc, likely if we get any retracements. So I'll pick the best picks out of them is what I'll be taking. Well, New Zealand dollar is very, very, very much likely that I'll be placing that trade right now, live now. So Australian dollar, nothing on the daily time frame. 4-hour time frame, I can accumulate 4-hour candles and then know that I'm getting a 12-hour candle. Now I'm not seeing anything on the 4-hour time frame, so I would be ignoring that for now. Another trade that I took, which will be breaking down because it's so far looking good. I'll be checking out Avgo also because that was a trade I took last year before the market closed for the year. So Avgo Broadcom, that's it. So open up, bruv. Avgo might open bullish, but we'll see. I plan on closing this trade at a 1 to 1 risk to reward, which is here. I'll be closing this trade because we have a gap here, and aside just the gap that we have in this particular point here, we also looking like a shoulder, because this is a neck, this is head, and this might be a shoulder formation right here. So once I get to this level, I'll actually be calling it a day on half go. Now the trade I took was on gold, right, and that was before I rounded up the year. And remember, I'll be looking at valuation shortly for all these currency assets I took a trade on, but I just want to look at gold because gold had this rally base rally level here. So I covered for this pivot below, and then that was this entry here. You see that this zone almost failed, but yeah, you can see that we are almost at 1-to-1 risk to reward on gold. And with the whole insecurity, not necessarily insecurity, the whole abduction of Maduro, which is the Venezuelan president, and geopolitical tensions right now, I know more money will be coming into gold. And if you are following Trader Nick, then he explained more vividly why he's very bullish on gold. So if you know Trader Nick for more than 2 years, then you know Trader Nick is a very solid trader on gold. Especially Trader Nick has had crazy recent years on gold. Not like he hasn't had his own bad days, but the part of least resistance is listening to Trader Nick for me. So that is what I will be doing, paying attention to Trader Nick. Silver, on the other hand, I'm not participating with silver at all, because when I had the chance here, I ignored it and the market left me. So I'm not trying to rush. I've learned my lesson. I was wrong. Moving on to the next trade. Oil, nothing for me right now. So that's basically it. Now I want to look at valuation for all these assets that I had mentioned earlier, and that is valuation on New Zealand dollar and the rest of the currency. So let's check that out. So long-term valuation on euro, actually extremely overvalued long term. Short term, let me confirm that this is looking at dollar. So input here DXY. So yeah, so this is the dollar. So short term on euro, which is this graph below, the one up is long term, the one down is short term. So short term euro is looking undervalued. Now to justify any other asset that I'm taking a trade on, which is the New Zealand dollar, short term we are below the mean line, but we are not necessarily undervalued. Long term we are actually overvalued on the New Zealand dollar. So taking a buy trade on the New Zealand dollar when we are overvalued is actually counter intuitive, which is not the best thing to do. Short term valuation on the Swiss franc is also undervalued, which is also not the best way to go about it. Canadian dollar, we are undervalued short term. Long term we are overvalued. But it will take a lot for us to start looking undervalued long term in any of these assets. So that's why I would not necessarily base my trade on, but valuation is very, 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 very necessary. You get valuation is very necessary. I cannot ignore the place of valuation at all. So I can easily ignore seasonality and take trades just off valuation and COT report, but you see seasonality that can be ignored. So the part for me to take right now that I realize is just for me to rest, not rush it really. So if we can get undervalued more on the New Zealand dollar short term, would be a better trade for me, would be a better option, would be a better trade for me. So I think that's what that would be the better play. Just wait for a while, hold a bit, because already I'm having 2 trades running, which I'll be showing you quickly before we round up this particular weekly outlook. So I have 2 running trades. So adding, and does that mean, is there any possibility that I now regret not having taken this trade? Very, very, very likely, but valuation is not supporting my trade right now on the Swiss franc, because we are okay. I want to sell Swiss franc, so valuation supports Swiss franc, right? Because long term we are still in that overvalued range, but short term we are undervalued. Canadian dollar, on the other hand, still overvalued long term. So still I can be taking that trade on Canadian dollar when we get that retracement, because it would also be very nice. Why? Because short term valuation would also be above the mean line when we are getting that retracement. So yeah, Canadian dollar is definitely solid. But where I have my problem is this New Zealand dollar. I can take the trade off short-term valuation alone, which is this particular graph here. So because short-term valuation, we are below this middle line here, and then seasonality is good, COT report is also good. So I'm thinking on how I'll go about it. Euro, undervaluation, but nah, for now I'm out of euro territory. I'm actually not trying to buy euro, especially now that we are seeing retail behavior being extreme. I wouldn't be in a hurry to go and start buying euro. No be, I am not Bayern Munich, bro. Get it? If you don't get it, forget about it. But Australian dollar is out of it, like I said. What I'm paying attention to is this New Zealand dollar. This New Zealand dollar is solid. COT reports, we are we are still good on COT. The retailers are slightly corrective right now, but they haven't come to a very corrective point where I would say, okay, yeah, the retailers are no longer bearish. The institutions are still looking bullish. So, but recent behavior might suggest something contrary, and I don't want to be. One thing is that if I'm having to dwell on an analysis for long, then then it's very likely that trade should be ignored. But I want to be very, very much meticulous in this year, so I want to make sure that I look at everything as they are and not just look at little things and then ignore the rest. So I would look at net position right now, and in terms of net position, I can see compared to previous behavior, I would not just base 2 weeks behaviors and call it a day, but then overall we can still see that the accumulation has been to the upside for the institutions. The institutions are looking more bullish on the New Zealand dollar than before. Retailers, it's just 1 month change in behavior, right? But for me, part of least resistance is actually if I can see the retailers come back to this very point here, this point where they were here, then I had to pause and cough because I didn't keep water close to me and I've been talking for about 30 minutes, bro. So that's crazy. So now, what I would be expecting is if the retailers should now start moving, they are becoming bullish enough to come back to this particular point where they were before in June last year, 2025. That is when I would now, I'm sure what I mean. So if we can get the retailers coming back to this particular point, then I would say, yeah, I shouldn't be looking so bullish on the New Zealand dollar. But it's not, we are not yet there. You can see that we are far from there right now. So I think I would be taking that trade on the New Zealand dollar, and then if I'm wrong, call it a day and then move on. But the part of least resistance is just this bullish trade on the NZD-USD, and that's the trade I'll be placing here. So let's log in and place this trade. This is the level here. Rally, base rally. I will be taking the trade off the preferred level. Normally I would measure the entire wider version, right? Then map the stop loss of the wider version. Then that stop loss of the wider version would now be my preferred level stop loss still. So entry will be from the preferred level, but then you get the point. The stop loss would be the wider version stop loss. So this is what the trade is looking like on the gold entry. I should have had more risk because it's not exactly 0.5%. This is about yeah, you can still say 0.5% because $210 risk. $210 risk. 1 to 2. No, I'm actually going for more than 1 to 2, but we are not at 1 to 1, so I can't bring this. Okay, we're actually at 1 to 1. I can bring this to break even, but the market has been funny for some time, so I would prefer we break this all-time high level and keep going up before I start looking to adjust my stop loss to break even for now. So I'm not actually going to be in a hurry for this. I've got the market hasn't opened on Broadcom, so I'm not doing that. I'm not taking any trade on. I'm not doing any extra thing on Broadcom. Still $130 risk on this trade. It's little risk on it, to see how that goes. But now what I'm about to set an order for is NZD-USD, and yeah, this was the trade I wanted to take earlier, but then the market missed this entry. Remove drawings. So we missed this entry, market left, and market has been moving since then. But now another opportunity has presented itself, which is this level here. So remember, I cover the wider version, get the stop loss for the wider version, and that becomes my stop loss when I take the trade off the preferred level. So that would be the price level, and this would be the entry. So we'll be getting that entry level now. So preferred version, funny how the preferred version on the CFD has been triggered, but this hasn't yet been triggered. On the CFD, this is the CFD chart, right? That wider version has been triggered, but if I check the futures, it hasn't been triggered. Even the adjusted chart here, okay, has been triggered on the adjusted, but on the unadjusted chart, it hasn't yet been triggered. I don't want to give myself too many reasons not to take this trade, so if this zone doesn't hold, then the zone below likely. But what I want to do now is to give more technical analysis to this. And how am I doing that? I'll check the 12-hour time frame on MetaTrader 5 and see. I'm very grateful for last year. Shout out to all of you that subscribed last year and are still here now. And don't forget to drop a like, and don't forget to like, really. And if this is your first time here and you're enjoying so far what if you've watched to this point far, if you've reached this point and you're not subscribed, I beg, help the boy out and subscribe to the channel. So on the 12-hour time frame, right, New Zealand dollar has this zone. We have this drop base rally here. So me personally, I wouldn't just take this trade of this 12-hour level, even though it looks very, very good. Tradanic has this trade already from here. So the wider version triggered this preferred level is what I would actually prefer taking here. This preferred version here. So which is looking like this also. So you might not now get filled, right? It might even be from here that the market moves. Very possible also. But if it doesn't move, then it doesn't move. No going to be crying over spilled milk for this particular trade or any missed trade. So but I actually want to take it from the preferred level. I don't want to rush into it. Not at all. Not at all. I have a trade running. I'm not in a hurry. So, but on the other hand, right, I can take off that 12-hour level. I can start with it on this Vertex account. Very minor risk on Vertex funding. Vertex funding, I can try that, but what trade is this? Please. Okay. I think yeah. The Australian dollar trade is still running. Funny enough, this has been how long? This trade has been since December 12th. Crazy, and it's still running. Do I think I want to be holding this trade? I doubt. I was saved by. Do I want to be holding this trade? Since I've held it this long, I wasn't stopped out. Closing it now would just be dumb of me, especially now that I see extreme behaviors from the retailers right now. So I'll just leave this since it hasn't closed me already. Let it just, if it wants to run, it should run, and if it wants to be good, then it should be good. But I'm not closing it. Then use NZD USD is what I wanted to check out and set a trade on this NZD USD. Daily time frame. You can see this level has been triggered already. If I had taken this trade off this, you see how different brokers, different things on different brokers, guy. That's crazy. See the difference here. Look at this zone here, right? This hasn't necessarily been violated yet, but on this recent low here has been violated, which is crazy to me. Everybody made a reflection at the least. Not a trend line is not what I'm looking for. This triggered this not fresh. Also, this is also not. This would have been the fresh level from here. Okay, triggered. I'll just say that it's triggered. I would not. I'm ignoring this New Zealand trade for now. Ignoring it for now. We'll see how that goes. Now, just look at this now. You see this point. Okay, it's actually similar to what was happening on the Campus Fund, but every broker with their own type of manipulation. You can't save yourself from it. It's just what it is, bro. It is what it is. This was appropriate risk. I don't want to start giving myself excuse that I should have added more. Now it's good. 210 is not so far from. It's not so far from $250 risk. So that's it. Let's call it a day, shall we? Because this is more than 30 minutes already. So first week outlook. I'll be seeing you on Wednesday. Like I said, don't forget to like Edro. So I'll be seeing you on Wednesday, and then we'll see how the market is holding up. But that's it. Same process this year. Set and forget swing trading, supply and demand, fundamental analysis. I'll be seeing you on the next one. Stay safe, trade safe. Happy New Year, and thanks for tuning in.